Hey guys, it is Tuesday, June 4th. Bitcoin's back to 69,500. And today I want to focus on Bitcoin versus Florida real estate. And I posted a little tweet about this and I made a little presentation, and I want to share this presentation with you guys and sort of go over the pros and the cons of Bitcoin versus Florida real estate. Okay, so here's my presentation. So why Florida? Why should we pick on Florida? Well, Florida is it's really the new home of real estate speculation for the last 20, 30 years. People, you don't talk about people speculating in Arkansas or New Mexico or Ohio or even California anymore. It's always Florida. And, I think there's a lot of reasons for that. I think, first of all, Miami is the gateway to South America. There's no state income tax in Florida. Florida's just gotten really built up with condos over the last 30 years. And there's just been a massive influx of people into Florida. And really, it has become sort of the standard for speculative real estate. And so, it's useful to ask ourselves: is this real estate in Florida, which is really kind of where most of the real estate speculation is happening in the U.S.? Is that really? How does that compare to Bitcoin? Okay, so you guys all remember the scene from The Big Short. That was in 2008. That stuff happened, 2007, 2008. And Steve Carell here is with a real estate agent, and he's touring properties. And the real estate agent's saying, well, this seller is very motivated, that we're going through this slump. And Carell's like, really? That guy looks really motivated. Yeah. Anyways, if you look back over the last this graph's not that great, but if you look, this is really the 2006 peak. If you look at the Florida real estate, we dropped from this 250 index level all the way down to like 125. So we dropped by 50% from 2006 to the bottom was around 2010. And then the next decade, we really went all the way back. We spent a decade just kind of getting back to where we were, and then really it took off again after the pandemic. So what I think is, it's over the last 10 years, it's doubled again. But again, you got to look at it really, these charts, you can get a PhD in cherry picking. And really from the peak of 2008, from that peak, it's really up only 50%. So, and I'm going to make a pretty good case that it really is, it may be going down. And why do I think that? Well, houses are much less affordable than they were 3 years ago because of interest rates, right? So right now, these mortgage rates are around 7%. They were around 2% back in 2001. So, we've gone up we've tripled effectively mortgage rates in 3 years. And so the houses are at least twice as less affordable. So the mortgage payments are twice as much. And that really stops new buyers from coming in. So we have sort of a frozen market. People who do want to buy, they don't have much of an option. They're having to pay up. But we're in a situation where it's very tough to buy a new house in Florida. So now, let's also focus on the carrying costs, right? So if you have $1 million condo in Miami, you don't have any state tax, but you do have 2% annual property costs. So that's 20% over a 10-year period. That's 20%, a little over 20% with compounding, right? And by the way, that property tax is is reassessed. So as your value goes up, your property tax goes up. You also have a 1% maintenance cost every year, so that's another 10% over 10 years. And really, there's about a 10% transaction cost. So there's the brokerage costs, the title costs, and the bid-ask spread, right? So, just like anything else, these markets aren't perfect, right? So all in, 20%, 10% plus 10%, 40, I would say 40% minimum carrying costs to hold that real estate over a 10-year transaction. It might be as high as 50%. Now, if you just hold it and keep it for yourself as a secondary place in Miami, that's what you're going to be looking at, 40% carrying costs. If you rent it, well, yeah, you're going to make some money. You might get 6 or 7% yield, but you're going to pay a property management tax, and you're going to take some of your own time to go to kind of check in on it and everything else. And so let's say that reduces your carrying cost to 20% over the next 10 years. I don't think you're going to get this thing to cash flow positive. It's still going to net cost you. Now, again, I'm not doing the analysis on a leveraged basis. I'm just looking at deploying some money. Some South American family decides to plunk some money down, and they're going to buy some Miami condo. That's kind of that's what their carrying costs are going to be. It's going to cost them money to own this condo, even if they rent it. Now, it's also super illiquid, right? So your Miami house is not attractive to a family that is got a new job in Ohio or in California or even in Tampa, Florida, not so far away. And it's vulnerable to weather and other circumstances. So if a hurricane happens, the economy slumps, if the Florida economy slumps, you may not be able to sell your Miami house or condo. So, it's highly illiquid, and it's not the perfect store of value. So now let's compare that. Let's bottom line it. Bottom line is, even if this thing doubles, which it did over the last 10 years, probably not going to do that over the next 10 years. But best case, once you factor in these carrying costs, you're not going to make more than 60 to 80% in nominal terms over the next 10 years. Worst case, you hit a slump like, 2006, and you start losing money, your asset becomes illiquid and you can't sell. Now, it really, people say, if you buy in this neighborhood, in the best neighborhood, you can always sell. To some extent, that's true, but things can also get very illiquid, even in the best of neighborhoods, right? And it's true that prime real estate will always move faster and easier than sort of second-tier real estate. But bottom line, you're looking at maybe 60% in nominal terms over the next 10 years. Okay, now, let's compare this now to IBIT, which any person who's investing in Florida real estate can buy. Well, the fees now are 0.2% per year. So over a 10-year span, that's 2%. You don't have any property tax. If IBIT goes up, you're not reassessed every year some property tax on IBIT. You have no brokerage fees. So you come in, you buy it, you own it. There's no title fees. The bid-ask spread between where you buy it and sell it is 0.1%. It's tiny. It's completely liquid. There's $20 billion of IBIT out there. And you're looking at an asset which, I don't want to go over all the arguments, but the power law, the adoption, everything, this asset could easily grow 5 to 10% times over the next 10 years. So instead of doubling, where the other one might maybe double, this is going to go 5 to 10x over the next 10 years. So I think what this is saying is really there's a pretty good case to be made for why Bitcoin really stands to beat Florida real estate as an investment over the next 10 years. And I think there's a lot of people who, there's a lot of speculative activity in this Florida real estate market that could easily go to IBIT. And the same is true for other speculative areas in other countries. Maybe it's Mumbai, maybe it's Bulgaria, I don't know. But, all over the world, the same analysis is true to some extent. And I think if you did the analysis in your country, you would find that Bitcoin will win. So I think this is just another reason why the future for Bitcoin over the next decade looks extremely bright. Thank you.